Hello everyone, welcome to this week's edition of the Fibonacci Review. Today we're looking at Westpac Bank, one of the major banking stocks in Australia. Now we did do a review on this stock in April where we saw the price level around here was perfect on a Fibonacci level. Let's just review that. You can see that we start the price retracement tool from the high, we drag that across, and you can see that the market did reverse bang on cue at that Fibonacci retracement level. What we're going to do today is to show you how you can find these potential reversal points weeks and months ahead. And W.D. Gann was the discoverer of the timing element in markets. Now what we need to do is to go back in the history of the chart and find at least the yearly high and the yearly low. These should be major reversal points in the past, and we simply run time counts from them. Now to save a bit of time, I've done this previously, and in Market Analyst 6 you have the capacity to place things on your chart and actually hide them in this protection box through here. You can see here that I've got the yearly low, and I just simply click on these things to hide them and it brings them back. It's a very handy little feature. It means that you can do your analysis and take parts off it so that it doesn't cloud up your screen. You can see through here that I've just marked the yearly high for 2006, the yearly low for 2006. These 2 points here are the yearly lows for 2007. Now you've got two there because you'll notice that the low in January was 23.37 and the low in August was 23.35. Now eventually one of these two lows will prove to be the dominant low, but we don't know that until we actually give the market some time to prove it. And of course we've got the yearly high up here, November 2007, which was the end of the bull market and the start of the global financial crisis. What we simply need to do here is to take a time price label tool, and we'll start from the yearly high of 2006, and if we just run that through there, you can see that that time price label tool is showing us that it's the week ending the 5th of May. Now if we add a new label to that, Gann used to start his counts, he'd just go 4, 8, 12, 16, 20 and so on, and he would know then that the week of 18th of May 2007 was likely to be a major volatile point because it was 55 weeks away from that yearly high. So in advance we'd know to watch this area, and you can see that 54 weeks was an outside reversal week, 53 weeks was a minor inside reversal week there. So these 2 weeks were showing signs of stress after the market had done a very strong rally, and of course some profit taking pulled prices lower. Now if we'd seen the bar chart signals, the inside and the outside week and the Fibonacci time count, we could have taken appropriate action and saved ourselves some good profits. Let's just move a little bit ahead now from that yearly high of 2006. If we go down to the last major low, you can see that's 142 weeks. Now Gann said that 144 was his greatest discovery in trading, and if you have a look you'll see 143 weeks is an inside reversal week, and week 144, 6th of February 2009, is the start of the climb that Westpac did from those lows. So there, bang on cue, you can see that the market's done a fabulous time count, giving us a warning. Let's just take a look now at the yearly low for 2006, which occurred in July. Now this was the area we were looking at on the daily review. Now we would have known way back then that that area was 142 weeks from the yearly low of 2006. So we know that there's a time count there. 144 weeks is a major turning point. There's a potential there for a reversal in the market, but when we've got the price and the time both coming in at the same juncture, there's a very good chance that that market's likely to reverse, and that's exactly what the market's done on this case. Let's now take a look at the next yearly low. If we'd started a count from the yearly low of January 2007, one thing I noticed here when I was doing this was that the time count up through here was 88 weeks from January 2007, and of course 89 we know, sorry, let me just line that up because we've picked the wrong bar. Here we can see that 89 weeks from the low of 2007 was also a major reversal turning point, and the market fell down very heavily from that $24.86 point through there. So we know that this is a yearly low that does produce reversals. Now what we can do here is we can simply take this time count now, and you can see that I'm just stretching it out into the future till I get to 144 weeks from the yearly low of 2007. Gives me a date to watch of October 2009, mid-October 2009. So I'll be watching Westpac very, very carefully, and it gives me any signals like it did down through here or it did through here in the middle of October 2009. I'll know then that the market's likely to change the direction it's in at that point of time, and if that's a threat to any trade that I have, I can take some appropriate action. I hope you've understood this, and of course any questions or queries you may have, you're more than welcome to shoot them through. I'm happy to answer those for you as quickly as I can, and I'll see you again next week with another look at this fabulous Fibonacci technique in trading. Bye for now.